A stock market that doesn't want to relax. We're going to summarize the week that we had an FOMC in, which is the meeting of the Fed. We're going to summarize a week where we got the CPI print. We're going to summarize a week where everyone is crying overbought. Let's look inside and see what exactly is overbought. Why is the market overbought? Is it really overbought? Should we worry? Is a correction coming? Is a crash coming? We're going to talk about all these things. And of course, we're going to talk about all the news, summarize the week, and maybe look ahead at the few days that we have next week. Are you ready for it? Let's begin. Hello everyone and welcome back to the channel. I'm Micha Stocks and our channel is Stock Talk with Micha Stocks, where we talk about stocks and remind everyone that this is not any financial advice, and everything and anything that you see here is only for educational purposes and entertainment. That's why our thumbnails look the way they are. Look how colorful they are. If you're new to the channel, it would be amazing if you can subscribe to the channel and turn the notifications to on, and that is how you will get notified every Saturday night, Sunday morning when I upload our weekly summary. Let's dive in. In the last 5 days, the major averages, again, came on top of the red, the green on top of the red. The NASDAQ up 3.82%, S&P up 2.5%, Dow Jones up 1.25%, and the Russell up over 0.5%. When we look year to date, the NASDAQ is up 37.8%, the S&P up 14.8%, the IWM up 7.3%, and the Dow Jones, up 3.4%. This is mainly due to the wrong positioning of too many people, too many financial institutes going into the year. And right now, some of the gains, if not in the last few weeks, a lot of the gains are fear of missing out. We're going to talk about that in a second. Short coverings and taking money from money markets and back into the market. When we look at the major indices, look at the technology up 4.3% this week, materials up 3.4%, consumer discretionary up 3.2%, and you can see on the bottom side, we still have energy lagging and financials lagging as well. Diving in even deeper to the US industries, we can see airlines with a great few weeks up another 5.65%, same for software and semiconductors, but on the flip side, we still have the regional banks, which had a few days in the red, mainly waiting for the decision of the rate hikes, and then, of course, all the oil services. I want to point out something very interesting. In the last few days, in the last few weeks, we keep hearing of the Magnificent Seven. The 7 biggest companies that are the ones that are fueling this rally. Basically stripping out them, saying you won't really have a rally, you would probably be up only 2, maybe 3%, or even negative on the year. Bespoke, without even meaning to, presented this table. And this table actually called out something very, very interesting. After we heard everything about the Magnificent Seven, again, the 7 biggest stocks that fueled the markets, I want to show you something that might be very interesting when you look at the data. So we know that the NASDAQ is up, the S&P is up. We talked about that in a second. I want to focus right now on the global markets. And I want you to look at this column saying year-to-date 2023. Look at the different markets which are not impacted from US. They do not have Apple and Microsoft and Nvidia and AMD and Tesla and all the Magnificent Seven. Brazil year-to-date is up 18.8%. France is up 18.4%, almost all-time high, if not all-time high. Germany is up 20%, all-time high. Italy is up 19%. Japan is up 16.9%. Mexico is up a whopping 30%. And Spain is up 19%. UK is up only 9%, and others you can see here. So when we keep talking about the Magnificent Seven, maybe we are just trying to excuse the fact that not all of us, Some were just not ready for the rally. And they're trying to convince everyone that it's not their fault, it's the specific stocks and all that. Because when we look at the data, did Germany have Apple? Germany's in a recession and it's up 20%. Mexico? What Apple do they have? They might have apples, but not the Apple company. 30.67%. And that brings us to the point where every time we see an overbought reading or extreme overbought when we look at stocks that we're looking at, yes, it's an automatically generated measurement. Looks from standard deviation. Yes, we are far away from the 50-day moving average. Yes, the markets went up. But when we think about how these measurements come to life, they come to life by going back and looking at the 50-day moving average. If in the last 50 days we didn't really move a lot, and now we're moving higher, it will show an overbought reading. This does not mean we might not get a correction, but it does mean that all this hype around overbought just doesn't mean that we're really overbought. When we look at the NASDAQ, when we look at the S&P, I want to show you something also very interesting. So look at the S&P for a second. This is the SPY, which is the ETF following the S&P. At the bottom, I pulled out one of the common indicators that people use. Personally, I do not use it because it's a lagging indicator. That's why I do not use it. It's called RSI, Relative Strength Index. The measurements is 0, or the scale is 0 to 100. And usually when we're closer to the bottom, around 30, it means that we are oversold. We are around 70 and above, we are overbought. These measurements do not mean that the stock market is going down. They do not mean that the stock market is going up. Usually, it's good practice to buy when the RSI is low and to sell when it's high. It does not mean that it doesn't keep on going. Same goes for the NASDAQ, and you can see it's the same measurement. We are now at the overbought relative strength. But when we dive into the definition of relative strength, look at the definition. It's a momentum indicator, which means it's lagging. The relative strength index compared the security strength on days when prices went up versus days when they went down. Now, it's a very good measurement, but look in the year to date. When we look year to date, we can see that the S&P, let me mark this up, had days where it kind of stayed in a range. Same for days when it stayed in the range. So the RSI should have dropped. Here we saw the drop. Here, the S&P didn't do a lot. It's just like when you run and now you slow down. You were in interval, you took some kind of an interval run. You are now cooling down. Your heart rate is supposed to go down. Well, it didn't. All this time, the RSI didn't go down, which means that our reading started very early. It started around the 50 instead of around the 35. So when we go up from 50 to 73, we went up 20 points. If we go up from 35, 20 points, we're still at 55. And again, it does not mean that we will not correct back down. On the contrary, as bulls, we expect a correction. It will cool down all the indicators. It will give all the indicators or all the alarms to cool down and for more money to flood into the market. But to say we are overbought all the time, you know what? It sounds like a very good excuse for someone that was late to the party. So that was the RSI. Other people keep saying that the market is very expensive. Well, they're right, but they're also wrong. The forward PE for the S&P 500 currently is 17.8. If you're new to forward PE, it means that we're taking to the price of the stock, dividing it by the earnings per share. This is a common measurement just to compare companies to companies, stocks to stocks. And when we look at the S&P 25-year average, the average is 16.8. You can see it in the green line here. And we are a bit above that line. A bit, not a lot, a bit. But now let's go back to the Magnificent Seven. If we strip them out, we're actually at 15.8. Is the market expensive? Does it need to drop? And yes, I know the conditions might not be ideal, but that doesn't mean that we are on the brisk of collapsing. It just shows that you need to stick to the math and not to all the feelings about fear, about greed, about all the others. And to summarize it, look at Jonathan Farrow from Bloomberg, summarizing how this last 6 months look like. January talked about a soft landing. February, no landing. March, hard landing. April, there's a credit crunch. May, it's only mega cap tech. And June, guess what? It's a new bull market. Why? Because we went up 20% from the bottom. This is how our emotions interfere with our decisions. Stick to the math. When we stick to the math, we make logical decisions instead of emotional ones. What else do I have to show you here before we go to the news? Well, this shows that investors are still mostly invested in bonds instead of a market that went up 14 to 38%. Bonds gave them 4%, 5%. How can you explain making 4% instead of 14 on the S&P 500? You cannot really. And even if you underinvested in equities, like Bank of America shows on their survey, Michael Antonelli shows us, they're underinvested in equities, which means that there's a lot more money to flood in the market. Are you ready for the news? Let's start. FOMC, Wednesday, summary, decision. We are not raising rates, at least not for now. But we're still frightening the market. We're still saying, guys, we're planning on raising rates twice more this year. It's okay to say it, but there's a bit of a problem. The problem is that CPI was also released this week. And CPI shows a continuous drop in month-over-month inflation, which drops the yearly measurements down to 4%. When you calculate 12 months, you see that the highest reading of June will disappear next month, which means that when we summarize all these together, this is a headline CPI, and put it back on the chart, it means that most likely we will see a 3 handle next month on our year-over-year CPI. And on a 3 handle, do you see the Fed keep on raising rates above 5%? That is the question that the market right now is trying to solve. And it seems like it took the market 12 hours to go back to the green after trying to understand if that's going to happen. The ECB, the European Central Bank, also raises rates. Inflation there is not cooling down yet, and that's why they need to keep raising rates. Unemployment is starting to tick higher. The initial jobless claims came higher than expected, which is good for the Fed. They're looking to break the employment market. It's not that good for if you are looking for a new job. When we look at other pieces of information, currently on the CNN fear and greed marking, we are now at the 82 measurement, which means that the market is at extreme greed. Lance Roberts shows you on this chart that every time you see the red arrows that you bought when we were in greed position, I know very close to 80, usually it wasn't a good time to buy. Usually the best time to buy is when everyone is fearful, whether it's fear, extreme fear, or anything else. Now, does that mean that everyone is extremely greedy? You want to go back and see how many people are still in money market funds? So it's a great measurement. But good question if it's really there or not. Citi, the bank, ticker C if you want to invest in it, says that the market is going to break down and go back to 4,000. The S&P currently is around 43 to 4,400. They believe we're going to go down to 4,000, which means a 10% drop. Why do they believe that? Because the economy, because of inflation, because of the job market, because. At the end of the day, every day that we keep going higher, all these calls need to close up their positions, their short positions, which rallies the market even more. Add to that, Bank of America, Hardnet, sees a big US stock rally followed by a big collapse. By the way, all these things might happen. I haven't been in the future yet. I'm recording this video in real time in June 17th. I do not know what's going to happen next week on Tuesday, Wednesday, Thursday. I don't. But I do know that if we keep saying the same thing and the market keeps going up, Everyone that says that needs to cover their shorts. This fuels the rally. And again, I'm expecting a correction. I want the correction to happen. I'm a bull in the market. I want corrections. It reduces the relative strength. It reduces all the greed. But I do not see a collapse, at least not now, maybe in the future. Ryan Dietrich also shows this week that when you count the advanced decline line, usually there's a measurement on Wall Street Journal, how many companies went over 52 weeks high versus 52-week low. We are now breaking out of an area that we were from April 2021, that we didn't create new highs, meaning more companies are gaining momentum and breaking the 52-week high. Does that sound like a bear market or a bull market? You can answer yourself. China is feeling they're not participating in the party. And that's why the party is meeting with economics and business leaders around the country to supercharge their economy and bring more money in, usually through stimulus. That's why the Chinese stocks went up in the last week or two. And data coming from from China shows that China youth jobless rates hits a record, which means that they're not finding jobs. This is not good. It's a challenge for policymakers because Chinese want everyone to work. That's how communism operates. And in order to even push that forward, President Xi celebrated his 70th birthday this week, met with Bill Gates during the weekend, trying to talk about how to stimulate the market, but also talk about AI. When all the Western countries are afraid of China acquiring AI capabilities, Bill Gates talks with the Chinese president about AI. Yeah, I also think it's strange. And are you ready for the ugliest, most beautiful car that exists? Well, this ugliest, most beautiful car drove through an In-N-Out during last week. Where did our screen go? Here it is. This car was spotted in Mountain View, California with a new jungle wrap. This is the Cybertruck, supposed to be released during Q3 or Q4 this year, which means in the next few months. Look at all the heads turning. This is no doubt the ugliest, the most beautiful car that everyone and anyone would like to have in their garage, even just to frighten the burglars. So this is the Cybertruck doing another publicity run. You call it the way you want. Baidu, ticker BIDU. The Cybertruck is Tesla's, by the way, if someone missed that. Baidu, ticker BIDU, wins China's capital city, Shenzhen, and they permit them to provide full self-driving. That's great. It means that Chinese are starting to being open to the idea of full self-driving. Intel is going to invest $4.6 billion in Poland in order to produce chips. There's a saying that Polish people sit in the corner in the dark and complain. And the joke is that this factory will not need lights because anyway, they're going to do it in the dark and complain. Stagadush. And if you don't know the Polish people, that's why you don't understand the joke. WeWork, ticker WE, just announced that they have approved a 1-for-10 reverse split. The ticker went so low. How low? 0.25 with a market cap that is so low. How low? Less than almost $500 million. They're going to do a reverse split, which means that the stock is going to start trading at 2.5 at a price of $2.5 instead of 0.25. Otherwise, they would be kicked out of the stock market. Where were we? We were here. Virgin Galactic set a date for their first tourism flight, and it's going to happen 27th to 30th of June. I'm not going to be on that flight. Unfortunately, I wasn't able to secure my seat there, but others would. It would be an amazing commercial flight. Hopefully, knock on wood, everything would be okay. We're going to get marvelous pictures, and everyone that has money is going to start booking flights, and at least that's what Virgin Galactic hopes. Mediterranean restaurant Cava IPO this week. Now, I love their salads, but the IPO made a lot of news. The reason why it made a lot of news is because it showed that there is so much money on the sideline waiting for exciting things to happen. And while they're waiting for exciting things to happen, that stock went up from 17 to 40, 17 pre-IPO, to 40 opening trading the first day, which means that everyone, or maybe the IPO market, is back and there's so much money on the sidelines. Again, are we in a bull market or a bear market? You know my take. Oracle says that it's seeing exploding AI demand. And Oracle is not a new startup. You can't say that they're trading at a crazy multiple or something like that. And they're saying they're seeing exploding AI demand. And they invested a lot in creating the Gen 2 data centers for generative AI. And now they're winning the business. And great for them for investing in that. And guess what? WhatsApp. Yeah, Meta's WhatsApp is starting to gain traction in the US. 10 years later than the rest of the world, but still. When you look at the daily active users, you can see that at least during the month of June, there's an increase in people using WhatsApp, and you see more and more groups being created on WhatsApp. And at least for Meta, this would create more and more opportunities for business accounts and other things that would generate more and more money. That's Meta. And the $1 trillion club, well, NVIDIA not only entering it, but staying in it, keeps going up and not losing their $1 trillion market cap, joining Amazon, Alphabet, Aramco, Microsoft, and of course, Apple. US FTC got an approval to block the Microsoft Activision merger. Behind the scenes, Microsoft actually wants to go to court, at least to settle it once and for all. Can they acquire or can't they acquire? Jury's out if it's going to happen or not. And AMD had their annual conference this week. Very, very impressive hardware capabilities. The only caveat to that is nothing is ready yet. Everything is a few months ahead. And if AMD is supposed to be the rival to NVIDIA, well, it showed progress and catch up, but it didn't show that it's there yet. So NVIDIA is still out of their, let's say, they're not afraid of someone catching up to them, but AMD is gaining traction, and don't sleep while forgetting AMD. Let's talk about next week. Next week is mainly a week where Fed members are going to talk about inflation. They're going to talk about rate hikes. Bullard is going to Europe or Southeast Asia and is already going to talk about the markets, or at least his opinion, 6:30 in the morning Eastern. Before we talk about that, just a quick reminder that Monday there is no trading. So Tuesday, 6:30 in the morning, Bullard is going to start to talk. We're going to hear from Bullard, from Waller. Jerome Powell is coming to the Hill to testify. So Fed, but mainly trying to frighten everyone. We're going to have jobless claims. And when we look at companies that are reporting, you can see that we're almost no companies reporting this week. We have FedEx, KB Home, FactSet, Darden, and Accenture. But we're all waiting 3 more weeks to the next earnings cycle. When we look back at the markets, at the S&P, you can see that the S&P broke out of any resistance. It's right now trading around 4,400. Friday was a red day, finally starting to come down a bit, to cool down. This does not mean that we're, at least in my opinion, we're not going to crash tomorrow morning, but a cool down, a correction is needed, and it's good for the bulls as well as the bears. The bears need some air, and the bulls want to relax a bit, especially when trading volume should start going down because of the summer before they pick up again. I hope you enjoyed this weekly summary. If you did, I would love if you can smash that like button, and we will meet next week, same time, same place, on Micha Stocks from our channel, Stock Talk with Micha Stocks, where we summarize every week what happened in the market. See you next time. Bye-bye.